Ever wondered what the current state of the Indian and global stock market is? Well, you've come to the right place. Let's begin with a quick tour of the global stock market landscape as of November 2023. Starting off with the United States, the powerhouse of global finance, we've seen some fascinating trends. There's been a fair share of ups and downs, with Wall Street bulls reacting to fresh inflation data and potential rallies. The Federal Reserve's monetary policy and rate hikes have been a significant influence, leading to a cautious optimism about the future. Moving on to Europe, the markets have been equally intriguing. Companies like HelloFresh and Phoenix Group Holdings are making waves, demonstrating the dynamic nature of the European market. Interestingly, the Russian Wealth Fund is considering diversifying its assets, hinting at the increasing importance of strategic investment in such uncertain times. Let's not forget Asia, where economic data indicates that China's economy is slowing down more than anticipated. This slowdown has had repercussions on oil prices and stock futures, further contributing to the global financial puzzle. Notably, the global market has also been impacted by significant events, such as the Saudi Aramco posting a 90% jump in quarterly profit, and the tech market predicting exponential growth. The global market is a complex web of interconnected events and trends, each influencing the other in unexpected ways. In the midst of this global overview, it's important to remember that each market has its unique characteristics and influences. Whether it's the Federal Reserve's cautious approach to rate hikes in the US, Europe's dynamic corporate landscape, or Asia's economic slowdown, understanding these nuances is key to navigating the world of investment. It's also worth noting the role of emerging trends, such as cryptocurrencies. With tech market leaders warning investors to be cautious of platforms advertising high returns, it's clear that the world of investment is evolving, and it's more important than ever to stay informed and adaptable. With this global context in mind, let's dive deeper into the Indian stock market. Now, let's turn our attention to the Indian stock market. The Indian stock market has been through its share of ups and downs this year. The performance of the major indexes, the Sensex and the Nifty, reflect this roller coaster ride. Both indexes have witnessed significant volatility, mirroring global trends as well as reacting to domestic events. A critical factor influencing the Indian market has been the impact of global events. The Indian market, like its counterparts worldwide, has been affected by the ongoing discussions around inflation and potential interest rate hikes. The ripple effect of these global economic shifts can be felt in the performance of our indexes. Moreover, the domestic scenario has also played a pivotal role. From changes in government policies to corporate earnings reports, every event creates a ripple in the market waters. Let's take a closer look at the performance of various sectors. The IT sector, for instance, has been a standout performer, driven by the continued digital transformation push globally. On the other hand, sectors such as auto and real estate have felt the pinch due to supply chain disruptions and regulatory changes. As for individual stocks, we've seen some stars shine brighter than others. Reliance Industries, for example, has been a strong performer, buoyed by its diversification efforts into digital and green energy. Infosys and TCS have also done well, reflecting the robust performance of the IT sector. However, it's important to remember that the stock market is not just about the highs and the lows. It's a complex ecosystem influenced by a myriad of factors. From global economic trends to domestic policy changes, from sectoral shifts to individual corporate performances, every cog in this machine plays a role in shaping the market trajectory. As we can see, various factors are influencing the Indian stock market. Given this market situation, what should investors do? That's the million-dollar question on everyone's mind, isn't it? Well, let's delve into a few strategic avenues you can consider. First off, diversification. It's a tried and true strategy that can never be overstated. Diversification is all about spreading your investments across various asset classes, sectors, and geographies. It's the financial equivalent of not putting all your eggs in one basket. By doing so, you can potentially reduce risk and volatility in your portfolio. Next up, consider investing in undervalued stocks. These are the stocks of companies that are priced lower than their intrinsic values. They often fly under the radar, but could offer significant returns when the market corrects. Remember, the stock market can be irrational in the short term, but is usually efficient in the long term. Thirdly, defensive stocks. These are the stocks of companies that provide essential goods and services. Think utilities, healthcare, and consumer staples. Their demand tends to remain stable regardless of the market conditions, making them a good bet during turbulent times. And lastly, maintain a long-term investment perspective. The market may be volatile now, but history has shown that it tends to rise over the long term. A long-term perspective can help you ride out short-term market fluctuations and focus on your ultimate financial goals. Of course, these are just strategies, not guarantees. They do not promise success, but can certainly help to navigate the choppy waters of the current market. It's crucial to assess your risk tolerance, financial situation, and investment goals before implementing any strategy. And there's another thing to keep in mind. No matter which strategy you pick, staying informed is key. Keep an eye on market trends, economic indicators, and company news. Knowledge is indeed power when it comes to investing. Remember, every investor's situation is unique, so these strategies should be tailored to individual needs and goals. With every market situation, there are risks and opportunities. Let's delve into some of the potential risks and opportunities that are currently shaping the investment landscape. First, let's talk about risks. Inflation, a major concern for investors worldwide, is one of those risks. It erodes purchasing power and can trigger economic uncertainty. Case in point, Wall Street's reaction to recent inflation data, as well as speculation about rate hikes from the Federal Reserve. Furthermore, we cannot ignore the slowdown of China's economy, which has significant global implications, given its role as a major player in the global market. Geopolitical tensions also pose risks. The diversification of Russia's wealth fund amid Western sanctions serves as a stark reminder of the influence of geopolitics on markets. The shift to include China's yuan and other currencies into its portfolio is a strategic move that could potentially impact global trade and currency dynamics. Market volatility is another risk. Remember the Santa Claus rally? Historical data shows that the market recovers during the last 5 trading days of December and the first 2 of January. But a December without a Santa rally can lead to a weaker than average year. Now let's pivot to opportunities. Despite these risks, there are sectors that are undervalued and offer potential growth. For instance, certain recession-busting stocks that performed well during the 2008 to 2009 downturn could potentially repeat their performance in the current market. Emerging markets also present opportunities. The jump in Saudi Aramco's quarterly profit, for instance, highlights the potential in emerging markets, particularly in the Middle East. Technological advancements, particularly in the tech market, offer immense potential. Crypto founder Sam Bankman-Fried's predictions for exponential growth in the tech market underscore this. But as he warns, investors should be cautious of platforms advertising high returns. And finally, the shift towards a proof-of-stake system for Ethereum could lead to a sell the news event, creating an opportunity for savvy investors to capitalize on potential market movements. Being aware of these risks and opportunities can help investors make informed decisions. Remember, knowledge is the key to navigating the ever-evolving investment landscape. To wrap it all up, we've journeyed through a comprehensive analysis of the current state of the Indian and global stock market, illuminating the path for savvy investors. In our global market overview, we noted significant events and trends that are shaping the financial landscape. From the cautious optimism expressed by J.P. Morgan Asset Management's chief strategist David Kelly, to the potential rally in the stock market following inflation readings, it's clear that the ebb and flow of the global market is influenced by a multitude of factors. We then turned our attention to the Indian stock market. Despite facing its own set of challenges, the resilience and potential of this emerging market are undeniable. Investors can find opportunities amidst the turbulence, provided they are equipped with the right knowledge and strategies. Speaking of strategies, we discussed a variety of investment approaches suited to the current market conditions. Whether it's investing in recession-busting stocks that have a history of performing well during downturns, or diversifying assets to include non-traditional currencies like China's yuan, the right strategy can help navigate the unpredictable waters of the stock market. Next, we delved into the risks and opportunities on the horizon. We considered the impact of potential rate hikes from the Federal Reserve, the slowing Chinese economy, and the growth of tech market. While these factors present risks, they also offer opportunities for those willing to seize them. Finally, we must remember that while the market's trajectory is influenced by a host of factors, ultimately it's the investor's ability to adapt and respond to these changes that will determine their success. Whether it's the potential for a Santa Claus rally to boost US stocks or the impact of inflation on consumer spending, staying informed and adaptable is crucial. In conclusion, the stock market, whether in India or globally, is a dynamic and ever-evolving landscape. It's filled with both challenges and opportunities, and being equipped with the right knowledge and strategies is key to navigating it successfully. Remember, the stock market is always changing, so staying informed is key. Thank you for watching.